you can play hedge. Yeah, no one ever got rich hedging. And in fact, it's expensive. It's going to be bad for gold going forward. What people want to know is it going to go on another crazy run to 8,000? When I look at it, I just see a pause. And, I'm on the record saying 3,500, I'll start to be interested. Every time something crops up that's unpleasant, out comes somebody, pulls the lever, pumps in the liquidity, gets it back up again, and sets it off on that straight line again. It's only a matter of time. We've had silver spike. We've had gold spike. We're going to get copper vertical moonshot.
Clem Chambers, founder of ANewFN returns. Clem, welcome back to the show. Markets are surging to new all-time highs. I'm talking about the stock markets, S&P 500, and the Dow Jones, and the NASDAQ. Gold is back up to $4,480, almost $4,500. That's more than an 11% increase since the beginning of August. Are you buying into this rally? Welcome back, Clem.
Well, yes and no. I'm. What's happened, and as far as I'm concerned, has been a big liquidity injection. And that pushes up everything. Now, certain things will kind of, droop pretty quickly, and other things will carry on going. And, these liquidity injections, the money goes everywhere. I mean, they can't just point it at something. They have to just go boom. And of course, it goes into gold, it goes into silver, it goes into platinum, palladium, copper, you name it, it goes there. But some things, it won't stick. Because if you get a nice, lorry load of cash from the treasury to go play, you go and play in the frothy beta stuff first. And then when that frothy bit, gets less interesting, you pull it and put it into lower beta stuff. And ultimately, it just does what it always does, has done every time they've done it. It just goes V-shaped bottom and then back on that long-term line that you can see. Just look at the S&P 500. It's a straight line for years. And, that they pulled the lever because it was getting a little bit spicy, and off we go. And so, I've been to hell and back to heaven again, because of, the liquidity, the concern in the market about what's been going on has now been counteracted by free money. And so we're now back on the gravy train, and off goes the AI trade, and off goes all that stuff. And, the Cosby crash stops. You bail out Japan while you're at it, and away she goes again. And the thing to remember, the biggest piece of news, which no one's even, you won't read it anywhere, is that President Xi Jinping is coming to America on September the 26th. That's the big hairy deal. And, I don't think the market is going to go down or crash or anything horrible will happen to it before then. I mean, you wouldn't want that, would you? And I should think there's a firework display planned somewhere in the world. It might actually be in the Middle East, because, the two great men are getting together. Trump went and saw China and Xi, and now he's coming back. I mean, that is a big, hairy deal, because China and America at loggerheads, which they kind of are, that is potentially catastrophic. But if they're all mates and they just agree to be, competitors at the top levels of the economic value chain, that would be great for everybody. Absolutely fantastic. But obviously, if they fall out and start, wanting to not be nice, that would be drastic. But the fact that President Xi is coming to America September the 26th or whenever that is, 4th, 6th, that's a big deal. That's a very, very big deal. And if that meeting goes wrong, you'll see it in the markets the next day. And if it goes right, you'll see it in the markets. And, it's great. It's great that he's coming, because ultimately there's all this massive economic activity coming down the pike. And, if you don't go and blow each other up, that will be amazing for the economies of the world, and for anybody who's in the markets. It'll be amazing for their wealth.
Meanwhile, from the government of the United States, Trump says the U.S. has total control over the Strait of Hormuz and might keep it. Said on Truth Social that the U.S. has total control, a claim that Iran has disputed. I think we will keep it. CBS is quick to point out that the number of vessels tracked during transit at the Strait of Hormuz fell to a one-week low of 8. About 130 ships a day passed through the vital waterway before the war started on February 28th. 6 people on a vessel in the Red Sea were killed by Iran-backed Houthis. Does the U.S. have total control of the Strait? And if so,
Well,
should
first of
oil be
all,
going back down to 60? Yeah.
first of all, if you get your information from CBS News, you'll never get rich.
Okay.
Yeah. So, I mean, I've been writing about this, saying about this. I probably even said it on your show. America's got 3 options. Yeah. Siege, run away, or invade.
What are they doing now? What are they choosing?
Well, siege. You just sit there, choke them off, don't let anybody in, don't let anybody out. And then after a certain amount of time, every time they throw some exploding paper planes, you spot that bit and you flatten it. And then in the end, but they end up either, getting very unhappy with their lot, or the people get very unhappy with their lot, or you end up with a kind of Cuba situation. Yeah. If you run away, you look like a bunch of idiots and weaklings. So that's not likely to happen. And if you invade, well, 30,000 of your soldiers are going to die. And that's not something that you can have in America. So you can't invade, you can't run away, but you can siege. I mean, that's how Julius Caesar did the French in. He just built a wall around them. He had an army waiting for him. He built a wall around them, and then he built another wall around so nobody could come in and help them, and just left them there. And they starved. Yeah, and that's what America will do to Iran if they got any sense. Now, the only thing that could throw a wobbler, and a publication refused to publish an article I wrote on this subject, which shows you that is quite interesting, is that, if you want to make a statement, what are you going to do? You got the Houthis, right? Well, you could probably sort that one out much easier than you can sort out Iran. It's much smaller, and they get all their stuff from Iran anyway. So, Saudi can go in and do it, most of it. So, Saudi Arabia and America invades that bit of Yemen and sorts it out. Now, if you look at the strategic document that came out last November, if I remember my dates correctly, it kind of said it would work with its allies to sort out issues. So if there were issues like this, it wouldn't just do it on its own. It would work with its allies to do that. Well, of course, Saudi is the ally, and Saudi is the one that's taken all the grief from the Houthis because they're on the border there. So, America, Saudi, Yemen invasion, one way or the other, in some configuration or other, would probably sort that mess out, and also underline to Iran and the rest of the world that America wasn't just going to sit there looking dumb. Yeah. So I think you'll see that 50-50. And as I said, I think that America will be organizing some pretty spectacular fireworks for Xi when he arrives. And that might be one of them.
Before we continue with the video, let's talk about a problem that comes with owning gold. Now, gold has long been treated as a store of value, but the catch is that sitting in a vault, it doesn't pay you anything. So that's where today's sponsor, Monetary Metals, comes in. They offer investors a way to earn a yield on gold paid in physical gold. Through their leasing platform, investors can earn up to around 4% annually, with yield paid monthly in ounces rather than dollars. So your holdings are measured in gold itself, not in fiat currency terms. The gold stays your asset throughout, and it can be redeemed at any time. Thousands of investors are already earning a monthly yield in gold through Monetary Metals. So visit the link down below, monetary-metals.com/Lin, or scan the QR code here on screen to learn more and get started today. Yeah, as we're speaking, 4 crew, 2 rescuers killed in a Red Sea attack. The U.S. is striking ships in the Gulf of Oman. And later in the day, the Houthis confirmed they attacked a ship in the Bab el-Mandeb Strait. Now, meanwhile, the Iranians have said that they don't want to engage with Trump at all in fact, they don't want to engage with the U.S. government at all until after Trump leaves office, which is in 2 years. And
yeah, good luck with
that. they basically said until the Americans pay us $300 billion and walk away with without a nuclear deal, we're not going to engage with the U.S. government. So they're sitting out the siege, apparently. And if we're not going to get any
you have to sit out a siege. That's what siege is.
Well,
you sit in your castle
if we're not going to get any
and
dialogue,
you starve.
what happens? Yeah.
Well, I mean, that was always going to happen if they didn't pull off a quick action that just kind of worked, like Venezuela. Well, it didn't, did it? So then you're going to get the hardliners in control, which is where we are, and you're going to get the local people that might have been a little bit wobbly about supporting the government in Iran, all of a sudden all getting behind it, because you do, don't you? And in a war, it doesn't matter how nutcase your leadership is, as Germany proved, everybody kind of gets behind you. So they're stuck with that. But, if you just go a bit quiet, downplay it, as Trump said, and you just sit there and, the food dries up and there's no water. They've got a major water problem in Tehran, or did have. Your water starts running out and you got no food and your power starts wobbling. And every time you do anything, but, you can easily end up with Cuba, right? Which is, decades of that sort of thing. But we'll see. We'll see. It's not whether it will work, it's what will happen. And the siege is the only thing that is high probability. And I've been saying that for, months now. And here we are. Trump has said it. I'm sure he doesn't read my stuff. Yeah, that's the only thing they can do. And the other thing they can do, and I think it's high probability, is sort out the Houthis. Because in a year, you won't need the Strait of Hormuz. It won't be relevant. So, the only thing you've got to do is stop people throwing rockets into the alternate routes, and the Houthis are the ones on there. And yes, they can make rockets that can go all the way to Lebanon, but every time they fire one, I'm not sure how they're making them now. And on top of that, I'm pretty sure they can't make it hardly any of this stuff if China decides not to supply them with all the motors. It's all coming out of China, all that kit. Iran is not a high-tech country.
The markets have responded to recent developments with interesting developments of their own. Let's talk about gold first, Clem. Like I mentioned in the beginning, introduction, gold has broken above $4,000 for the first time in months. It's now trading firmly above $4,400 as we speak right now on the 12th of August. And it looks to me like gold has been reacting to declines in the 10-year interest rate. So the 10-year U.S. Treasury yield, for the most part, has been climbing up. So for the last, 2 months, a month and a half, both gold and the interest rate, long end of the curve, have been going up together. However, on a short-term basis, they kind of still move in opposite directions. And today we have a bit of a cool-off in yields, and gold has gone up. The point I'm trying to make is, Clem, it looks like every time inflation expectations or inflation cools a bit, gold goes up. And
gold's beautiful for inflation hedging if that's what we're going to get, which is what we are going to get. But I think what people want to know is it going to go on another crazy run to 8,000? Not is it going to go up to maybe 5,000 and fall back off again, or maybe not go up anymore from here and just, stick around these levels and then drop off again. Mm-hmm. And when I look at it, I just see a pause. And, I'm on the record saying 3,500. I'll start to be interested. But it depends. You see, gold is just a tool. It's just another asset. And what do you want to use it for? If you want to use it to save money over the long term, that's got a good inflation adjusted return on it. Well, not inflation adjusted, but will give you a hedge against inflation. Gold's great. Silver's great. And platinum and palladium are great. And you would pick them up over the long term. But as a speculative move, I don't think they're particularly interesting. Look at what's happened to all those AI stocks in the last few days. They've absolutely whipped round. And, if you're a speculator, you'd be speculating in equities right now, not in gold and silver. If you are a stacker, if you're a saver, if you want a part of your portfolio to give you some coverage for the coming inflation rises that we're going to see, gold and silver is perfect for that. Absolutely perfect. Why wouldn't you buy it? Why wouldn't you dollar cost average into gold and silver, as long as you can sell it at a good price if it does go up a lot again? Why wouldn't you? Why wouldn't you buy that? So I think if you're a saver, gold and silver are good at these prices. You might be able to buy it a lot cheaper, but in the long run, you'll get a good return. That's what dollar cost averaging is all about. So, why not? But if you're a speculator and you want to hear me say it's going to go to 6,500 by Christmas, I think that's extremely unlikely. I think it's more likely to curve over and then drop off again. But we'll see. I mean, we'll see. That liquidity injection that we just seen, if they keep doing that, because they've got reasons to do that, because, things are going wrong somewhere or whatever, then it will go straight into gold. Let's just look. There's a big issue with money supply in America right now, because America's going to need way more M2 money supply to do this onshoring, to do this AI build out, to do this reindustrialization, all those things that the current administration is saying needs to be done. That requires a lot of new money. And of course, that will go straight into everything. Any asset will go straight into it. And gold and silver will not be left out of that little rush of joy. And, crypto too, Bitcoin. Yeah, look at Bitcoin and gold. They've probably done exactly the same tick by tick, give or take. Yeah. So money in, assets up. And we're in a money in, asset up environment. But there's plenty of places where the assets are going to go wild. I mean, I think copper, I look at that chart and I go, it's going to double in the next year. And, gold ain't going to double.
Wait, copper's going to double in the next, why? Let's take a look at the copper.
I didn't say going to, for sure, but I look at the chart and I go, oh, that looks like it's going to be like $28 a ton. Or have whatever that is in pounds. Well, why? The why is relatively obvious. There's not quite enough of it going, and the not quite enough of it is going to get worse and worse and worse. And why is there not enough of it? Because any way you look at America and the world, it involves electrification, lots and lots of electrification, and that's what copper does. And AI is huge amounts of electrification, so much so that I think the electric cars are going to have a problem. But anyway, maybe not. But even if even if all the cars and all the lorries that are meant to be electrified get electrified, there's not enough copper. And then you've got the AI build up. There's not enough copper for that. We've got to have so much more electricity in the West. If we are to catch up with China, the West has got to have, and I'm going to choke, it's such a big number, 250% more electricity. 250% more pylons, more transformers, more cables. Mm-hmm. I mean, that's vast, right? Now, of course, you can say, well, it doesn't have to do that. It doesn't have to have as much energy as China. Well, it ain't going to be good if it doesn't, because energy is life. Electricity is life. Everything, you take away electricity and you're back in the Stone Age. So you've got to, if you're going to keep up with China, which is why this September visit is so important, right? Because it's so important that America and China are shaking hands and being sensible. Yeah. If America's to catch up with China in terms of energy, it's got to make a lot more, because it's all based around electricity. All this AI, all this industrialization, all this onshoring, it all needs electricity. And you see what a pickle Europe's got into by not having enough. I mean, there's nothing wrong with having too much, but it's certainly a big problem having not enough. And China's going hell for leather. That's why they're building nuclear power stations everywhere in America now, or trying to, or going to. Yeah, you see that? Oh, that's a chart and a half. For me, I just see the bottom of a hockey stick there. In fact, I see the bottom of two hockey sticks, one gigantic one and one large one. Mm-hmm. But anyway, if you want to know what I think about hockey sticks and technical analysis, you need to check out my YouTube. And I go over it there all the time.
Yeah, everyone should subscribe to Clem's YouTube channel, by the way. Very good analysis. And why am I not being able? Okay, here we go. Stocks. Yeah, I want to show you something here. Copper has just been somebody called this on my show a puppet to the AI trade. And that's kind of what we're seeing right now. Copper and stock markets, they're like, they're two best friends walking around the park together, side by side. And I just don't. That's the story right there. What do you make of this?
Well, okay, it's really, really simple. Yeah, you build a big shed with lots of metal and clever stuff in it. And all you do is you put machinery inside of it, mainly from NVIDIA. You put a dirty grey electrical power into one end of the building, and you have a little strip of optic fiber coming out. And all AI is energy in, hot air out, and artificial intelligence. That's it. Energy plus hardware equals AI plus hot air, right? And so all the things in the AI value chain, which is long and very interesting, they're all going to go nuts. And energy is the big one because it ain't easy. It ain't simple. And building it out is just a big, hairy deal. I mean, nuclear power stations, I mean, how many have they switched on in America in the last few weeks? 5? 5 little ones, 5 experimental reactors, which is going to turn into non-experimental reactors. 5. There would have been riots amongst the hippies if you'd done that 10 years ago. Nuclear power station, that's Satan, that is. Why is it all of a sudden cool and groovy? Well, because no energy, that's it. You're over, aren't you? So energy, big hairy deal. And the backbone, the spine of energy is copper. Yeah, you can use aluminium for bits and bobs of it, but copper, and ain't enough of it. And if you want to make another mine, it's 10 to 20 years to make one. So it's going to go ape, isn't it? And I look at that chart and everyone say, what are you seeing? I don't know. I'm hallucinating. Clem AI is hallucinating. That looks like a dirty, great hockey stick to me. And of course, what happens in commodities, what you have to understand, if you go back and look at hot commodity periods, 1 month it'll be chocolate. Cocoa will go ballistic, go up 4 times and put back down again. And then 3 months will go by and it'll be nickel that'll do it. And then it'll be 4 months will go by and it'll be another one. And so it'd be potatoes. And we're in that sort of a cycle. So it's only a matter of time. We've had silver spike. We've had gold spike. We're going to get copper vertical moonshot. And it'll come down. It'll go up to 30,000 and everybody will say it's going to 100,000 and then it'll come back to, 20,000 or 15,000 or something like that. But, this cycle of commodity verticals has, begun quite some time now because all those things that people discounted in the past, the physical things, the commodities, the sheds, the machines, the cables, that's all coming home to America. And there just ain't that much of it. It's all made in China. And I read a real horror story recently. I mean, all our antibiotics, all those chemicals are made in China. 80% of all our medicines, the precursors are all made in China.
Mm-hmm. I read a story. I don't know if this is true. I have to verify this, but apparently, British special forces on one of their ships used Chinese sensors, and that relayed data intel back to China.
No, couldn't happen. Couldn't happen. Yeah, that's right. Their drones are phoning home. Oh, the British seem to be doing this at them. Yeah, well, that's why they banned American connected cars from China. And that's why they're banning ROM bars, Doom bars from your home networked Hoover is being banned in America, and robots are being banned. Chinese robots have been being banned. Well, there's several reasons. One, America can't make them. And for it to have a robot industry, oh boy, you better, give it a reason. And if Chinese have got 100 different robot manufacturers out there right now, with some big number, and you've seen them do their thing, well, you haven't seen any American robots do their thing, have you? You've seen a sort of, a Boston Dynamic thing hobbling about for 10 years, and you've seen Musk's one walking around like it's got a bad case of arthritis of the knees. And there you've got the Chinese ones doing kung fu. So, how are you going to have a robot industry now? America won't be able to catch up. So you have to ban them, don't you? And you can't have a car industry if you let the Chinese cars in because they're half price and better. I mean, they're even knocking out the European car makers. And the European car makers were meant to keep the American car makers, on their tiptoes. But, Volkswagen is up the creek without a paddle. And, that's why you have to ban these things, because if you're going to want to have any industry at all left, you've got to take action. And that's what's going on in the West now. And America's taking the first moves.
Okay, I wanted to show you this chart. Well, not chart, but this graphic here. This is Strait of Hormuz traffic. As you can see, 10 vessels currently in the zone. On average, we're looking at 0.6 per day on a 7-day moving average. Anyway, the volume here is roughly in line with the volume right after the war began. However, the price of oil is not back towards 100 and 110 on the WTI, which is where when the war first began. I wonder why. Why is it that traffic has basically fallen to start of the war levels and the price is still lower?
Well, one of the big issues, or not even issues, one of the big things is that China said, oh, we'll stop importing oil. We've got enough energy as it is. We'll just burn some coal. So China stopped importing oil, and that freed up that oil that's being produced for everybody else. If China just carried on doing its thing with oil, that would be an interesting situation. So, that's talk about soft power. And again, we're back to China, because it has got itself into a situation where it is borderline the dominant power now. And thank goodness Trump went over there and obviously built some bridges. And she is coming to Washington. That's such a big deal. Such a big deal. As opposed to last year, when, it was going to be invade Taiwan next May. And that would have been the balloon going up. And that's why gold went through the roof. And then when that potentiality disappeared, gold came down like a stack of bricks. So, the China-America thing, that's a new world. That's a bipolar world now. And together, if they're on the same page, or at least can share a page or two, that will be fabulous. And if they can't, it'll be disastrous. So big, big, big days at the end of September.
When you see a story like Xi Jinping is visiting Washington, does that make you want to sell gold?
I haven't got any. I'm long gone.
Okay, but let's say you did hold some. Yeah, it doesn't make you
want to buy it unless I think that it'll all go, wrong in September. But no, I mean, it's just, if I said to you, oh, it's going to go up to 5,000 by Christmas, you'd jump up and down. But that's 20%. I mean, you can buy a big American stock and it can do that in a day. So if you see, I just say it's just another asset. And people that constantly pump gold, they talk about, crazy numbers and crazy dynamics and the end of the world and the death of the dollar and implosion and zombie apocalypses, or equivalent of, and, buying guns and getting a compound up a desert somewhere and all that stuff, as if, because that's the only money that's going to be is gold. And therefore, that's why you hold it. Put all your money into gold. By the way, I'll sell it to you. And that's the only safe place to have it. Well, I don't believe that. I was talking about gold when it's 1900 or whenever it was, saying it's going to go up a lot, just in the same way as I just said that about copper. I looked at the chart and went, oh, blimey, this thing's broken out. It's on its way. Wow, it's going to go a long way. I see dead people. I looked at the chart and I said it's going to 3,500. And it did. And then I looked and I said it's going to 5,500. You can read it all in Forbes and my reasoning behind it. And copper is the same setup. So I look at gold and I go, I love gold. I love gold. I've got entertainment gold. I've got tons of that. I've got, watches. In fact, got one on right now. Yeah. I love gold, but not investment gold. Not at the moment. I would get into investment platinum. That's looking quite interesting. And palladium, not looking so interesting, but platinum's looking interesting. So it's just another asset. And I know lots of people consider it to be something holy. But like Bitcoin, like the people that love Bitcoin and would say I was the anti-Bitcoin man. It's just another asset. And it's a lovely asset. But it ain't going to go to 8,000 by Christmas. It might go up a bit more. It's all down to how much M2 they pump into the system to fund the AI build out. So in effect, gold has got a little bit of a stake in this build out because they're going to need a lot more M2, a lot more cash. They're going to print a lot of money going forward, so much money. And that's going to cause elevated inflation. That's all good for gold. So nothing's going to be bad for gold going forward.
All right, let's do a lightning round. Which of the following that has recovered? And I'm going to pull these up on the screen here as we go through them. Which of the following that has moved dramatically in the last couple of days to almost 2 weeks would you be buying? Semiconductors fell in July, up about 16% on the SMH, 20% for August. Would you be a buyer of semiconductors right now?
No, I would be watching that top, and if it breaks through that range and starts heading up, I would buy it. But it could easily break down and drop a lot. So that form is, quite a bull trap shape. But all you do is you put a range around it, and if it breaks up through the range, happy, and if it breaks down through the range, sad. It's as simple as that's the oldest technical analysis trick in the book. You just put a box around it, and away you go.
Okay, another big mover, we have to bring this up, is the Japanese yen. Dramatic appreciation on the day of the intervention, which was early August, but now it's kind of fallen back down.
Yeah, it's not a huge jump though. I mean, it's a nice looking chart, but that's a bearish chart, right? Because things that are bearish spike up and float down. Things that are bullish float up and spike down. Well, that's a spike up and a float down. So that's bearish.
Mm-hmm. Bitcoin hasn't moved at all in the last couple of weeks. All this volatility in other markets, and then we've got nobody's talking about Bitcoin. You haven't mentioned Bitcoin even once in this entire interview, which is a telling sign of its own.
I mean, I've been saying on your show, I've been bored witless by Bitcoin, and people keep stealing it. I mean, how many hundreds of millions have to get stolen before people realize? Well, they have realized it's not safe to hold it. Now, again, you put a range around that level. It's quite clearly a level, and if it breaks down, it's going to go down a lot. It's going to go under 40,000. If it breaks up, well, who knows?
Yeah, and it's interesting how, look, these semis haven't corrected to new, haven't retraced new all-time highs, but the overall stock market has.
I like that.
And you look at this. Yeah, this is not a flag. This is not a float down. It's maintained. It's this is the S&P 500. What do you think of this chart?
Right. So my thesis is there's been a liquidity injection, and that's what it's being fired at. Liquidity injections are fired at the equity markets because that is all that America's got these days. Yeah. Imagine that your equity market was the London market. All your Silicon Valley companies would fail. I mean, that'd be it. It'd be over for AI. They could never fund it. That'd be it. All the value, all that has been pushed into the stock markets. That is really the core value now. It's not factories, none of that stuff. It is being abstracted out into equity prices. Yeah. So that's the core thing. Now I look at that chart. I would do exactly what I just said to the other things. Put a little box around that. But to me, that is so bullish. I would expect that to break up and travel just as far as it has since over these last few days. Yeah. But of course, it could arc over. You just put a little box around that, around the bottom of that range and the top of that range, give it a little bit of space and then just wait. I would guess that well, I mean, I'm long, I'm very long at the moment, and I'm smiling, but that is quite bullish. But if you squeeze that for like 5 years, go on.
Yeah, 5 years.
Yeah, stop there, right? Oh, that'll do. I'll do. That's a straight line. I hope you can see that straight line. So, I mean, what else do you need to know? And every time something crops up that's unpleasant, out comes somebody, pulls the lever, pumps in the liquidity, gets it back up again, and sets it off on that straight line again.
I said this on my show several times. I said, look, Trump did the exact same thing in his first term. People have short-term memory. Every time he's announced tariffs, the markets crashed and then rebounded, V-shaped recovery. And people said this time's different. This time turned out not to be different. And obviously the scale of the tariffs on an international level has been higher this time, the second term. He's become more unhinged the second term. He didn't invade or not. He didn't attack Iran the first term, at least not to this same scale. I mean, he did. Actually, he did. Let me take that back. He did, but he didn't bomb it to this kind of extent. But the point is, every time the markets went down during Trump's first term, it recovered in a V-shaped recovery. And this time it's not different.
Yeah, it's a liquidity injection. And it's probably coming out of the Treasury because the last one, not this one, but the last one was done while Jay Powell was under threat of criminal prosecution. So you can imagine that he wasn't going to hand out any favors at that point. So it has to come from somewhere else. There's only one other place it can come from, and that's the Treasury. And, they've got plenty of levers to pull and press and twist. And and obviously he can rely on them to do so because they're not, inverted commas, independent, are they?
What kind of precedent does that set when the president of the U.S. can issue to the Department of Justice an order to start a criminal investigation on a Federal Reserve chair if he doesn't lower interest rates or do whatever the administration wants?
Well, I mean, the American system has been indicting the top brass for political purposes for, forever. Goes all the way back to Bill Clinton at the very least. So the start, the medieval way of basically using criminal prosecution against your political enemies, nothing new there. Nothing new there at all. I mean, in fact, about the only one that didn't have it was Obama. But Clinton, it's not like one side does it to the other. They're always doing it to each other, and it's appalling. And it's a great American weakness, this lawfare, as they call it now. But as soon as Clinton came out, wasn't president anymore, all the cases were dropped. Yeah, as soon as old Trump gets in, all the cases are dropped. So it's not an independent judiciary, is it? It's a politicized judiciary that basically attack dogs. And of course, if you're a normal person, maybe you've done quite well, like someone like Jay Powell, not a poor man, but he's not a rich man. The cost of litigation will wipe you out. If you look at what happened to Giuliani, right? I mean, there's pretty much a political hero, turned around New York, blah, 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 absolutely devastated by that lawfare. And he's a lawyer, I think. So, it's a massive, massive Achilles heel in America. So nothing new there, absolutely nothing new. And in fact, Trump has been kind of relatively restrained in comparison with what happened to Clinton and what happened to him. What happened to him was off the dial, right? He didn't even give up when he got out of power. They kept on going. In fact, if they'd left him alone, he probably never got re-elected. Everyone would have forgotten him. But, they kept on trying to, string him up, hang, draw and quarter him. And that's probably one of the reasons he got re-elected.
It's interesting how Trump has basically put the hammer down on political opponents who would not raise interest rates, lower interest rates. He wants interest rates to be lower. Kevin Warsh can't do that right now with the current condition that the Iran war has created. He has to either keep rates unchanged or raise rates. 3 governors dissented last time when interest rates... Exactly, that's my point. They can do other things. They can do QE, They can buy Japanese yen, they can cap the long end of the treasury curve with yield curve control and other methods.
Yeah, exactly. They can do what they like. But what it means is there will be an elevated rate of inflation. You pay for this with elevated inflation. Yeah. But if you look at all the governments that play this game, it goes from all the way from, I think, Finland, just don't do any of that, don't even have a national debt. And you go all the way to Turkey or somewhere in Africa where they staple together bundles of notes. And it's the same, all on the same curve. Yeah. And America's far, 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 far away from, say, Turkey, which is what everybody gets told is going to happen to America. It's a million miles away from that. But the direction of travel is there. But, at the end of the day, money's an illusion. It's a pretty convincing one. And they've got the tools to do what is ever necessary to keep the wheels on, but the output of that is inflationary. Simple as that. Yeah.
Okay.
During
so
COVID,
what is the... I'm sorry. Go ahead, please.
I was going to say, during COVID, they printed money like nobody's business. And guess what? We got several years of inflation. They're directly connected, and they will have to print money for all this reindustrialization, all this competing with China, all this trying to catch up with them, all this rolling out AI. And they'll have to print it. And that will mean there'll be 5 to 10 rate of inflation coming down the pike. I think it would be 5 to 7, but that will be a thing. It'll have to be a thing. There's no way of getting back on track with the American economy as an industrialized economy rather than a service and a quaternary economy back to a primary and secondary economy. There's no way to do that without vast amounts of new money. And the same goes with AI. You can't go and, build these, data centers the size of, small cities without there being vast investment. And that's got to come from somewhere. It has to be printed. It has to be made. It has to be allowed to flow. And you saw a little bit of that with what just happened, because that is not about Hormuz. That's about the Kospi. This little jump here was about the Kospi, because that could have had a knock-on effect and blown everything up, because that was a proper crash. That was a dot-com crash over there, and now they've calmed that down. Because that could have got, you could have got a Asian contagion part 2 with that. And they came out and the liquidity was made available and the market stopped crashing and people stopped getting, margin calls, and they bailed out Japan with euros, not dollars, and up goes the market because all of a sudden there was a flood of money going everywhere.
Okay. So ultimate inflation hedge then, what would it be for this year?
Well, you can play hedge. Yeah. No one ever got rich hedging. And in fact, it's expensive. Yeah, hedges are expensive. Just go and have a look at option pricing. Yeah, whenever you want to get it, even now, which is kind of semi-boring, you go and look at it. You're looking at a year's hedge, 10% of your portfolio. Well, it's only 7% average return. So that is expensive, and you have to know when you need to do it, and you have to know when you don't need to do it, and that's impossible. So the best thing to do is not hedge, is to take a position. There's 2 positions. One is cash is a position. So you're going to get eroded away. So that's not so great. The other one is get on your front foot, get stock picking, buy the stuff that is going to be motoring. And there's enough of that out there. I mean, it's crazy opportunities in the markets right now. We're at the beginning of a bubble. That's not the same as being at the end, right? So jump on board, take a ride, right? That's what I'm doing. And yeah, it's a bit of a dangerous game, but it's not as dangerous as sitting there and hoping that the world is going to do you a favor, because it is not going to be doing you a favor. If you're passive, question. you're finished.
Give us one such opportunity then.
Copper. I mean, there it is.
There we go.
That's core. Right, but anything in the AI chain, and I keep saying this, and everybody looks at me blank, and you'll look at me blank when I say this. Goldman Sachs. Why wouldn't you be long Goldman Sachs? Yeah, they're going to be handing out the money, aren't they? Government go, here comes the money. Who gets it? Oh, Goldman Sachs and people like that. Yeah. You want to do this with that plant? You want to borrow money off me?
NVIDIA have partnered with leading
there you go.
market makers, Apollo, BlackRock, Blackstone, Brookfield, underwriters, Goldman Sachs, KKR, to establish AI compute infrastructure, $500 billion third-party capital.
And they're going to get 7% of that. They're going to get 7% of that. So it's 35 billion between them. Yeah. So they're going to be making out like bandits. Not that they aren't bandits, but So it's just the AI chain. Just follow it down. Follow the tree down the trunk, down through the roots, and just stake them out and be active and watch your show where there'd be people telling you what to do. And it's all there to be had. All there to be had.
Will oil retrace towards $100 by midterms, the midterm elections in November?
I don't know. I mean, I'm amazed that it's imbalanced, that election. I should have thought that the Republicans have waved goodbye to it, but they haven't. So I don't. If China is playing along, which it sounds like it did, because it didn't have to say, "Oh, we don't want any oil," while you're having all these conniptions. It didn't have to do that. Yeah, and it did. So if it's playing along, then it doesn't. Nobody wants high oil prices. But I mean, in the long term, all energy is going to get much more expensive. It's got to get more expensive, and oil is going to get more expensive because things that can operate perfectly well on petrol and diesel will be encouraged to do so, because they won't want to be redirecting electricity to anywhere but the reindustrialization.
Yeah.
And it's finite amounts of it. They just cannot make it fast enough. So there's going to have to be a reallocation of resources in electricity, and it's going to be pulled away from certain areas which electricity is not necessarily. And of course, that's got 4 wheels on it.
Excellent. Thank you. Clem, where can we follow you for more opportunities? Now,
Well,
you mentioned you have a YouTube channel. Yeah.
Yeah. For a little bit more thoughtful presentation, the Substack is a good place because I put everything I do there. And, I might even write up this conversation and put it there. And so everything I do ends up on Substack. And then YouTube, I'm on regularly every 2 or 3 days. I'll be there raving like I'm raving now. And, people tell me it's because I say things they don't hear anywhere else. That's the value. And yeah, I think that's right. I don't, as I said, if you're parroting CBS, you're not going to get rich. Yeah. And, you've got to be thinking well ahead of what comes next. So this Houthi stuff, I spoke to someone earlier, said, I haven't read that in the press. Well, yeah, of course you haven't. And it might not happen, but when it does, you'll be able to say, oh, that makes sense. Oh, someone said that. So I try to give people methods to make their own decisions. So like when I was talking about the hockey stick earlier in copper, they'll go, what the hell's he talking about? And come to my channel and see what I mean by a hockey stick and apply that logic to all sorts of assets. Yeah, not just copper's going to go up. I use examples, but I never want anybody to take the examples. I want them to take the technique. So I talk a lot about techniques.
Okay, good. Well, follow Clem there for more techniques. Clem, it's good to have you on as always. I look forward to the next update with you. Take care for now.
Thanks very much, David. See you soon. Bye now.